Hello, welcome back to another video. In today's video, we will be doing a short test, grade 12 test on taxation. Okay, it's 30 marks and the duration is 30 minutes. Let's have a look at the first question. Question 1 says, Ms. Nong is a teacher at Comyung Faba High School. She received the salary advice for the month of April. The annexure attached shows the tax table that is used to calculate Ms. Nong's income tax. But before that, let's look at table 1, the salary advice for Ms. Tong. We have the surname and initials, the organization, the ID number, the pay point, the job title, the appointment date, tax number, medical tax credits, pension number, salary notch, pay date, deposit institution, account number, gross salary, deductions, the net salary is not given. Then we have the earnings, which is the basic salary and the housing allowance. And we have the deduction, which is the tax, the pension fund, GEMS, SACE, and your union. Okay. So the GEPF is the pension fund. It's very important that we read all the information given to us in the table before we attempt the question. Let's look at 1.1.1. Differentiate between the concepts gross salary and basic salary. Okay, gross salary is the total earnings before any deductions like tax, pension fund, or UIF. Then we have our basic salary. This is the fixed salary amount before any allowances, bonuses, or deductions as well. 1.1.2 says, show that Ms. Nong's pension fund contribution is 7.5% of her basic salary. So, firstly, we need to take the basic salary. We need to find what that is. That is 36,719. So, they are saying that the pension fund is 7.5% of this. Right? So, we're going to take our basic salary and we're going to find the 7.5%. We're going to say 7.5 over 100. That is equal to 2,753.93. Okay, this is our GEPF, our pension fund contribution, and you see that it matches with the value on the table. 1.1.3, Ms. Nong transfers 6.5% of her net salary into an investment account, right? So for us to find our net salary, we know that the net salary, right, it's equal to the gross salary minus all the deductions. Okay, that is our net salary over there. We have our gross salary, which is 37619 minus our deductions. Now, fortunately for us, we have the deductions column there. We don't need to add all of that ourselves. It has been given to us, which is 13,791 rand and 40 cents. Okay, then we have our net salary, which is equal to 23,827.60. But remember, we need to show that she transfers 6.5% of her net salary into an investment account. So we're going to take this net salary over here and multiply it by 6.5 over 100. That is going to give us the investment amount from this net salary that she transfers every month, which is equal to 1,548.79 cents. Okay, so this is telling us that this amount is being transferred every month into an investment account. Right, let's have a look at 1.1.4. Determine Ms. Nong's annual taxable income. Now, for 1.1.4, they want to find the annual taxable income. Now, you have to use the gross salary, right, which is your annual taxable income. Then you're going to subtract. There are only three tax deductible. It is the unemployment insurance fund, the pension fund, and donations. Those three are tax deductible. Now, in the case of Mrs. Nong, she only has the pension. So in this case, we need to subtract the pension. Okay, and then that is going to give us our annual taxable income. It's important that we do not use the tax table at all to find the annual taxable income. We are first going to find the annual taxable income, then we use the tax um, brackets to find how much tax we pay. But to find the annual taxable income, we take the gross salary and we subtract the pension or the donations or the UIF. Then we can use that to calculate the tax payable. But for the annual taxable income, we're going to take the gross salary and minus the pension. In Mrs. Nong's case, we take the gross salary, which is 37,619, and you minus the pension, which is 2,753.93. This answer over here, okay, is 34,865.07. But it is important to note something very, very important. This is monthly. We need to know the annual taxable income. So we still need to multiply this by 12. Sometimes you will have these values in years and you don't have to multiply by 12. But since we are working in months, we need to take this monthly value and multiply that by 12. We get 418,380.84. Okay, this is our annual taxable income. Okay, taxable. 1.1.5. Define the concept tax rebate. But all in all, a tax rebate reduces the amount of tax a person has to pay. If you spoke about age or anything like that, that is also an acceptable answer. But as long as you mention the fact that the tax reduces. 1.1.6. State the number of tax rebates that a 76-year-old woman will qualify for in any tax year. Let us go to the tax table, and from that you can see that there are the rates over there below 65, 65 to below 75, and 75 and over. Important to note, someone who is below 65 will only qualify for the first tax rebate. The person age 65 to below 75 will qualify for two tax rebates. The one below 65 and from 65 to 75. And someone who is 75 and over will qualify for all three of that. All three tax rebates. You'll add them up. Okay, but in this case, the question only wants to know how many, and that is three tax rebates. 1.1.7. Show that the threshold for the person below 65 years of age in the table is correct. Now, those tax thresholds, they are telling us that if a person earns 95,750 Rand a year, they will not pay any tax if they earn this in a year. Now, how are we going to verify that this is the correct value? You take this value and you have it as the annual taxable income. Then we go to our tax bracket. This falls under the first tax bracket. Okay, and this says that this person has to pay 18%, okay, of the annual taxable income. So we find 18% of this value, and that is equal to 17,235 Rand. Okay, now we are saying that this person is under the age of 65. They qualify for a tax rebate of exactly 17,235, and we subtract our tax rebate, okay, from our tax, right, and we end up with 0 That is how we know that this threshold is correct, because we applied it into the tax bracket, we applied the tax rebate, and we saw that this is the amount of tax that this person has to pay, so that means this threshold is correct. Let's look at 1.1.8. Mrs. Nong's taxable income increased to 677,848 Rand and 65 cents in July 2023. Verify showing all calculations that his monthly is interesting, but it's fine, it's 2025, that his monthly tax after all rebates will be more than 12,000 Rand. Okay, so we need to find the tax. Now, once we have the taxable income, you can breathe a sigh of relief. Now you can go straight to your table, right? How do we apply this table? Now, 677,000 falls under the fifth tax bracket. Okay, this is the rate of tax. Now that we've identified the tax bracket, which is very, very important, right? This is the annual taxable income. The first step we do is we subtract our annual taxable income. Okay, so we have 677,848,65, and we subtract it from the number after above. Okay, so we have 673,000, and we have an answer of 4848,6, sorry, 65. Okay, now after we've done that, okay, we're almost working backwards from this rate of tax. First we subtract the 673, then we need to find 39% of that. Okay, so then we find 39% of our answer, and we have 1890.9735. Okay, so we've done this part over here. Then afterwards we add the 179,147. So we add that. We have an answer of 181,037 Rand. Okay, come all of that. I'm not rounding off up until the end. Okay, so now that we have this and we've applied the tax table, then we go over to our medical tax credits and our rebates. That is what we subtract towards the end after we've done our tax table. Now we need to figure out the tax rebate that Ms. Nong qualifies for, right? We don't know Ms. Nong's age, but we do have a crucial bit of information in the salary advice. We do have the ID number. That's interesting. So to find the age of Ms. Nong, we're going to take 2024, which is the year that this was applied. You need to read carefully. And we subtract 1968 to find the age, and we get the age of 56. So Ms. Nong is 56 years old. So Ms. Nong only qualifies for the first tax rebate. Okay, so we're going to take this 181,037 and we're going to subtract the rebate, and we get an answer of 163,802,9735. Okay, so we subtracted the rebate. The rebates are normally annually, right? But next we need to find, are there medical tax credits, or are they paying for any medical aid? Now it's important, if we look back at the salary advice, okay, we do see medical tax credits. That is very, very important. The medical tax credits is 728 Rand. Now we always know that the medical tax credits are monthly. Okay, so we have all these calculations are annually, right? They are all annually, so we need to be on the same board, okay? So we need to multiply this by 12, and we get 8,736 rand. Okay, it's also very interesting to note that if you look at the medical tax credit column, you can see that the primary member plus first dependent will add up to 728 rand. So another tricky question could have been, how many people does Ms. Nang have on her medical aid beside herself? And you know that she has herself and the first dependent, because when you add that, you actually get 728. Okay, but we do have that information, right, from the salary advice, this medical tax credit. And remember, it's always monthly, so we're going to multiply that by 12 because we are working annually. Now we know that the medical tax credits here, again, we're subtracting. Okay, so 136,802,9735, we subtract the medical tax credits, we end up with an answer of 155,066,9735. Now, they want to know in the question, what is the monthly tax payable? Is it below or under 12,000 Rand? Remember, again, we've been working with annual numbers over here so far. So this is the annual tax payable. This here is the annual tax payable. Now we need to know the monthly tax payable. That's simple. We're going to multiply that by 12 and we get an answer of 12,922 Rand, 25. So yes, it is above 12,000 Rand a month, not below 12,000 Rand. So this answer that we just got is the monthly tax payable. Let's have a look at question 2. New Zealand has a progressive tax system like South Africa, where they pay a certain percentage of tax for every dollar of income received. Now, this one is using progressive tax. It's used like the tariff system calculations. Okay, this is working very differently to what we just did, and we will not be doing, for the most part, unless they say it's progressive tax, we won't be doing our calculations like this. Okay, so tax rates for income received in New Zealand. A worker in New Zealand receives an annual salary of 19,850 New Zealand dollars. Calculate the worker's annual tax payable. You may use the formula tax payable 14,000 times 10.5% plus annual salary above 14,000 times 17.5%. So we're going to use the formula. We have one key information missing. All we need to do is find annual salary above 14,000 and substitute it over there. Now the mistake is that we take this amount and put it there, but it is saying only the salary that's above the 14,000 over there. Because you're already being taxed for the first 14,000, now you're being taxed for what comes after the 14,000. So we're going to take this and we're going to subtract 14,000. Okay, and we get an answer of 5,850 New Zealand dollars. Now, this over here is the annual salary above 14,000. So, to find the tax payable, you're going to substitute this in here. So we have 14,000 times 10.5%. Instead of percent, I'm just going to put over 100 over there. Okay, and 550 times 17.5%. Again, when it's percent, we need to divide it by 100. Okay, now we simply put that into our calculator, and the tax payable would be 2,493 Rand, 75 cents. Okay, thank you for watching this video. Comment, like, share with everyone to help them with taxation, because it is quite of a lengthy, difficult topic. But thank you for watching. I hope you fully understand, and leave a comment about anything. Goodness me. Goodness me.